Welcome to BigONE Weekly News Update. Financial markets experienced a significant shift in sentiment last week, ignited by a surprisingly dovish stance from U.S. Federal Reserve Chairman Jerome Powell. His remarks at the Jackson Hole Symposium signaled that a monetary policy adjustment is imminent, dramatically heating up expectations for a September interest rate cut and triggering a broad-based risk-on rally across asset classes. Market performance, divergence, and dominance. The crypto market saw a tale of two leaders. While Bitcoin, BTC, fell approximately 4% for the week to close at $113,500, Ethereum, ETH, stole the show. ETH surged to a new all-time high of $4,955 late Sunday, ultimately closing the week at $4,780, a gain of about 7%. Solana, SOL, also posted strong gains, rising 6.6% to $206. This performance further eroded Bitcoin's market dominance, which declined to 57.9%. On-chain data indicates that large investors, or whales, were partially responsible for this shift, moving tens of thousands of BTC into ETH and SOL positions, which placed short-term pressure on BTC. The momentum clearly favored Ethereum and other altcoins, a trend underscored by a record-breaking $125.5 billion in global perpetual contracts open interest and a significant sustained spike in ETH trading volumes. Despite the positive price action, both BTC and ETH spot ETFs experienced net outflows, suggesting a complex interplay between direct crypto trading and traditional investment vehicles. The macro picture. Dovish Fed meets tightening fiscal policy. The current U.S. economic landscape is defined by a unique combination of tightening fiscal policy and increasingly loose monetary policy. Tight fiscal policy. The U.S. Treasury is actively rebuilding its Treasury General Account (TGA) balance. Since early August, it has added $185 billion by issuing debt, effectively withdrawing liquidity from the market. This process is expected to continue, with an additional $300 billion in issuance likely needed to reach its $850 billion target, a process anticipated to conclude around September. Loose monetary policy. Chairman Powell's Jackson Hole speech delivered a clear message. The Fed put is back. The central bank's new stance implies that as long as the U.S. labor market shows weakness, the Fed will proceed with rate cuts. Even potential upside surprises in inflation data are likely to be dismissed as one-off phenomena rather than obstacles to easing. Asset response. A unified reflation trade. The market's reaction on Friday was a textbook example of trading on a dovish Fed plus risk-on plus reflation narrative. Equities. The Dow Jones hit a record high, with the Russell 2000 small cap index leading the charge, soaring 3.36% for the week. Treasuries and dollar. U.S. Treasury yields fell across the curve. The two-year yield dropped 7.44 basis points, while the U.S. dollar plunged over 1.3% in its largest single-day drop since April. Commodities and crypto. A weaker dollar propelled gold up 1%, while oil and cryptocurrencies joined the broad rally. Outlook and strategy. Positioning for the next 6 to 12 months. The Fed's pivot suggests market risk appetite will remain elevated for the foreseeable future. The new dynamic creates a scenario where even bad economic news could be interpreted as bullish, as it would fuel bets on more aggressive rate cuts. Consequently, any sharp sell-off in risk assets may present a buying opportunity. For portfolio allocation over the next 6 to 12 months, the following core assets are favored. Long-term risk assets, growth stocks, and cryptocurrencies. Assets benefiting from rate cuts, medium-term treasury notes and non-U.S. currencies. Inflation hedging assets, gold and treasury. Inflation-protected securities, tips. The week ahead, key events to watch. The market's momentum will be tested by several major events this week. NVIDIA earnings, August 26th. The tech giant's results will be a crucial bellwether for the AI trade and the broader U.S. stock market. U.S. core PCE data, August 29th. As the Fed's preferred inflation gauge, this release will be intensely scrutinized to see if it validates the Fed's one-off inflation narrative. U.S. crypto futures expiration, August 29th. This could add to short-term volatility in the digital asset space. Join BigONE today and take advantage of the growing cryptocurrency market.